Welcome back to Cashegories, your go-to channel for financial news, insights, and strategies. Today, we're diving into a topic that's been making headlines and stirring conversations among economists and investors alike: the BRICS Gold Rush. BRICS, an acronym for Brazil, Russia, India, China, and South Africa, are on a gold-buying spree that is setting records. What's driving these nations to accumulate gold at such a rapid pace, and what does this mean for Western nations, especially the United States? Buckle up, because we're about to explore the economic and geopolitical implications of this trend. The BRICS nations, an overview. To understand the significance of the BRICS Gold Rush, it's crucial to first grasp who the BRICS nations are and why they matter. Formed as an economic alliance, BRICS represents some of the world's largest emerging economies. Together, these 5 nations account for over 40% of the world's population and about a quarter of the global GDP. Their growing economic power has positioned them as key players in the global economy. Brazil, the largest country in South America, is known for its vast natural resources and significant agricultural output. It's a major exporter of commodities like soybeans, coffee, and iron ore. Despite facing economic and political challenges, Brazil remains a critical player in the BRICS coalition. Russia is a major global power with vast natural resources, including oil, natural gas, and minerals. Its strategic geopolitical position and military strength make it a key player in international politics. Economically, Russia has faced sanctions and economic isolation from Western countries, driving its focus on building economic alliances with non-Western nations and accumulating gold to bolster economic resilience. India, the world's largest democracy, is known for its rapidly growing economy, driven by a burgeoning tech sector and a large, young population. Despite challenges like poverty and infrastructure deficits, India's economic potential is immense. Its cultural affinity for gold makes it a significant player in the global gold market, both in terms of consumer demand and official reserves. China, the world's second-largest economy, has experienced unprecedented growth over the past few decades. Its economic strategy includes massive infrastructure projects like the Belt and Road Initiative, aimed at increasing its influence across Asia, Africa, and Europe. China's focus on accumulating gold is part of its broader strategy to diversify its reserves and assert its economic independence. South Africa, the smallest economy in the BRICS group, is rich in minerals, including gold and platinum. It plays a crucial role in the BRICS alliance by providing valuable resources and acting as a gateway to the African continent. Despite facing economic and political challenges, South Africa's strategic importance in BRICS cannot be understated. Historical context: gold and global finance. Gold has always held a special place in global finance. Historically, it has been used as a store of value, a hedge against inflation, and a safe haven during times of economic uncertainty. For centuries, gold backed currencies and was central to international trade. Even though the gold standard was abandoned in the 20th century, gold remains a critical asset for central banks and investors worldwide. The gold standard. The gold standard was a system in which the value of a country's currency was directly linked to a specific amount of gold. This system provided stability and confidence in the value of money. However, it also limited the ability of governments to respond to economic crises, as the money supply was constrained by the amount of gold held in reserve. The gold standard era ended in the early 20th century, primarily due to the economic pressures of World War I and the Great Depression. The Bretton Woods system, established in 1944, created a new framework where the US dollar was pegged to gold, and other currencies were pegged to the US dollar. This system lasted until 1971, when the US abandoned the gold standard, leading to the current fiat currency system. Fiat currency system. In the fiat currency system, the value of money is not tied to physical commodities but rather to the economic strength and policies of the issuing country. This system provides greater flexibility for governments to manage their economies, but it also introduces risks related to inflation and currency devaluation. In this context, gold continues to be viewed as a hedge against these risks. Gold as a safe haven. Throughout history, gold has been seen as a safe haven asset. During times of economic turmoil, geopolitical tensions, or financial market volatility, investors flock to gold as a reliable store of value. Central banks also hold gold as part of their reserves to ensure financial stability and confidence in their national currencies. The current gold accumulation trend. So, what's happening now? Data shows that the BRICS nations are acquiring gold at unprecedented rates. In recent years, countries like China and Russia have been particularly aggressive in increasing their gold reserves. This gold buying spree is not just a random act but appears to be a strategic move with far-reaching implications. China's gold strategy. China, the world's second-largest economy, has been steadily increasing its gold reserves. The People's Bank of China, PBOC, has been buying gold in significant quantities, reflecting a deliberate policy to diversify away from the US dollar. China's gold accumulation aligns with its broader economic strategies, including the Belt and Road Initiative, aimed at increasing its global influence. China's strategy involves not only buying gold but also increasing domestic gold production. China is the world's largest producer of gold, and the government has been encouraging the expansion of the gold mining sector. This dual approach of domestic production and international acquisition strengthens China's position in the global gold market. Russia's gold reserves. Russia, too, has been bolstering its gold reserves. The Central Bank of Russia has been one of the most active buyers of gold in the world. This move is part of Russia's strategy to insulate its economy from Western sanctions and reduce its reliance on the US dollar. Given the geopolitical tensions with the West, this gold accumulation is also a measure of economic security. Russia's focus on gold is driven by its desire to protect its economy from external shocks. The sanctions imposed by Western nations have limited Russia's access to international financial markets, making gold a critical asset for ensuring economic stability. Additionally, gold provides a hedge against the volatility of the ruble and other economic uncertainties. Other BRICS nations. While China and Russia are the front-runners in gold accumulation, other BRICS nations like India, Brazil, and South Africa are also increasing their gold reserves, albeit at a slower pace. India, with its deep cultural affinity for gold, has always been a significant player in the global gold market. The Reserve Bank of India has been adding to its gold holdings, reflecting a cautious but steady approach. India. India's gold strategy is influenced by its cultural and economic context. Gold is deeply embedded in Indian culture, symbolizing wealth, prosperity, and security. The Reserve Bank of India's gold purchases are part of a broader strategy to diversify its reserves and enhance financial stability. Additionally, India's gold demand is driven by the jewelry sector and investments, making it a critical player in the global gold market. Brazil. Brazil's approach to gold accumulation is more measured compared to China and Russia. The country has been increasing its gold reserves as part of its efforts to diversify its foreign exchange reserves and strengthen its economic stability. Brazil's vast natural resources and agricultural output provide a solid economic base, and gold accumulation adds another layer of financial security. South Africa. South Africa, a major gold producer, has a unique position in the BRICS coalition. The country's gold reserves are not just about financial security but also about leveraging its natural resources to strengthen its economic position. South Africa's gold industry is a significant contributor to its economy, and increasing gold reserves aligns with its broader economic goals. Why are BRICS nations accumulating gold? Diversification away from the US dollar. One of the primary reasons for this gold rush is the desire to diversify away from the US dollar. The US dollar has been the world's dominant reserve currency for decades, but its dominance is being increasingly challenged. The BRICS nations are seeking to reduce their dependence on the dollar, partly due to geopolitical reasons and partly due to concerns about the long-term stability of the US economy. Geopolitical motivations. The geopolitical landscape plays a significant role in the BRICS nations' decision to diversify their reserves. Tensions between the US and countries like China and Russia have made these nations wary of relying too heavily on the US dollar. By increasing their gold reserves, they aim to reduce their vulnerability to US economic policies and sanctions. Economic stability. Concerns about the long-term stability of the US economy and the value of the dollar are also driving the BRICS nations' gold accumulation. The US has a high national debt, and there are ongoing debates about fiscal policies and economic management. These factors contribute to the BRICS nations' desire to diversify their reserves and reduce their exposure to potential economic instability in the US. Hedging against economic uncertainty. Gold is traditionally seen as a hedge against economic uncertainty and inflation. With global economic conditions becoming increasingly volatile, gold offers a stable and reliable store of value. The BRICS nations are likely accumulating gold to protect their economies against potential financial crises and economic downturns. Global economic volatility. The global economy is facing numerous challenges, including trade tensions, geopolitical conflicts, and economic imbalances. These factors contribute to economic uncertainty, making gold an attractive asset for central banks and investors. The BRICS nations are accumulating gold as a hedge against these uncertainties and to ensure financial stability. Inflation and currency devaluation. Inflation and currency devaluation are significant concerns for many countries. Gold provides a hedge against these risks, as its value tends to rise during periods of high inflation and currency devaluation. By increasing their gold reserves, the BRICS nations are safeguarding their economies against these potential threats. Strengthening economic sovereignty. By building up their gold reserves, BRICS nations are enhancing their economic sovereignty. Gold reserves provide a buffer against external economic shocks and reduce vulnerability to foreign influence. This is particularly important for countries like Russia and China, which are seeking to assert their independence in the global economic system. Reducing dependence on Western financial systems. The BRICS nations' focus on gold is part of a broader strategy to reduce their dependence on Western financial systems. By accumulating gold, these countries aim to enhance their economic independence and reduce their vulnerability to external economic pressures. This strategy aligns with their broader goals of creating a more balanced and multipolar global economic system. Enhancing financial stability. Gold reserves provide a significant source of financial stability. They act as a buffer against economic shocks and enhance the credibility of national currencies. For the BRICS nations, increasing gold reserves is a strategic move to strengthen their financial systems and ensure long-term economic stability. Implications for Western nations. The US dollar's dominance at risk. The increasing gold reserves of the BRICS nations pose a potential challenge to the dominance of the US dollar. If these countries succeed in reducing their reliance on the dollar, it could weaken the dollar's position as the world's primary reserve currency. This shift could have significant implications for the U.S. economy, including reduced demand for U.S. Treasury bonds and increased borrowing costs. Reduced demand for U.S. Treasury bonds. As the BRICS nations diversify their reserves away from the U.S. dollar, their demand for U.S. Treasury bonds could decline. This reduction in demand could lead to higher borrowing costs for the U.S. government, as it would need to offer higher interest rates to attract investors. This shift could have broader implications for U.S. fiscal policy and economic stability. Impact on U.S. economic influence. The U.S. dollar's dominance has provided the U.S. with significant economic influence globally. A decline in the dollar's dominance could reduce this influence, affecting the U.S.'s ability to shape global economic policies and maintain its leadership in international financial institutions. This shift could lead to a more multipolar global economic order, with the BRICS nations playing a more prominent role. Geopolitical power shifts. The BRICS Gold Rush is also indicative of broader geopolitical power shifts. As these nations accumulate more gold and strengthen their economic positions, they could gain greater influence in global economic affairs. This shift in power dynamics could lead to a more multipolar world, with Western nations having to navigate a more complex and competitive global landscape. Increased influence of BRICS nations. As the BRICS nations accumulate gold and enhance their economic positions, they are likely to gain greater influence in global economic affairs. This increased influence could manifest in various ways, including a stronger voice in international organizations like the International Monetary Fund, IMF, and the World Bank, and greater leverage in trade negotiations and economic policies. Challenges for Western nations. Western nations, particularly the US and the European Union, may face challenges in navigating a more complex and competitive global landscape. The rise of the BRICS nations could lead to increased competition for resources, markets, and geopolitical influence. Western nations will need to adapt to these changes and find ways to maintain their economic and geopolitical positions. Impact on global gold markets. The BRICS nations' gold buying spree is also affecting global gold markets. Increased demand from these countries is likely to drive up gold prices, benefiting gold-producing nations and investors. However, it could also lead to greater volatility in the gold market, impacting other commodities and financial assets. Rising gold prices. The increased demand for gold from the BRICS nations is likely to drive up gold prices. This rise in prices could benefit gold-producing nations and investors, providing opportunities for economic growth and investment returns. However, higher gold prices could also lead to increased costs for industries that rely on gold, such as electronics and jewelry manufacturing. Market volatility. The increased demand for gold could also lead to greater volatility in the gold market. As prices fluctuate, other commodities and financial assets could be impacted, leading to broader market instability. Investors and central banks will need to carefully manage their portfolios to navigate this volatility and mitigate potential risks. Potential scenarios and future outlook. Scenario 1. Gradual shift. One potential scenario is a gradual shift in the global economic order, with the BRICS nations slowly increasing their influence and the US dollar's dominance waning over time. In this scenario, the transition would be relatively smooth, with both Western and BRICS nations adjusting to the new realities. Gradual diversification. In this scenario, the BRICS nations would continue to gradually diversify their reserves and increase their gold holdings. The US dollar would remain a significant reserve currency, but its dominance would slowly decline as other currencies and gold gain prominence. This gradual shift would allow both Western and BRICS nations to adjust their economic policies and strategies to the changing landscape. Collaborative economic policies. A gradual shift could also lead to more collaborative economic policies between Western and BRICS nations. By finding common ground on global economic issues, these nations could work together to ensure financial stability and sustainable growth. This collaboration could lead to a more balanced and resilient global economic system. Scenario 2. Rapid realignment. A more dramatic scenario could involve a rapid realignment of the global economic order, triggered by a major financial crisis or geopolitical event. In this case, the BRICS nations' gold reserves would provide them with a significant advantage, allowing them to weather the storm and emerge stronger, while Western nations, particularly the US, could face severe economic challenges. Financial crisis. In the event of a major financial crisis, the BRICS nations' gold reserves would provide them with a critical buffer against economic shocks. These reserves could help stabilize their economies and maintain confidence in their national currencies. Western nations, particularly those heavily reliant on the US dollar, could face significant challenges, including currency devaluation, inflation, and economic instability. Geopolitical shifts. A rapid realignment could also lead to significant geopolitical shifts. The BRICS nations, with their enhanced economic positions, could gain greater influence in global affairs, challenging the traditional dominance of Western nations. This shift could lead to a more multipolar world, with increased competition and complexity in international relations. Conclusion. The BRICS Gold Rush is a clear indication of the shifting dynamics in the global economic landscape. As these nations continue to accumulate gold and strengthen their economic positions, Western nations must adapt to the new realities. This requires a combination of strategic economic policies, investment in resilience, and diplomatic efforts to navigate the complexities of the evolving global order. At Cashegories, we'll continue to monitor these developments and provide you with the insights and analysis you need to stay informed and make smart financial decisions. If you have any questions or topics you'd like us to cover, please leave a comment below. Thank you for watching, and don't forget to like, share, and subscribe to our channel for more in-depth analysis and financial insights. See you in the next video.